Hey everybody, great to see you here this afternoon. My name is Laura Bolio. I'm the VP of Marketing here at Holistiplan, and I am joined by the incredibly talented Emily Rassam. Welcome back, Emily. So if this is your first time joining us, we are thrilled to have you. And if you've been to one of our webinars before, you're in for a very special treat. So as always, our goal is to deliver the maximum amount of value to you and to your practice to bring your practice to the next level. So today, Emily is going to be talking about how to stop boring your clients with boring tax jargon, which I know we say a lot of that around here, but there's ways around it. And so you might remember Emily as the breakout star from our tax planning summit back in April. There was actually so much demand for Emily. We wanted to bring her back for a recurring series to deliver even more value. So Emily is an Avistapedia top 100 advisor. She's a partner and senior financial planner at Archer Investment Management. And before we jump into it, I just wanted to make sure you know we have you covered. This will 100% be recorded. Any questions you have, please drop it into the Q&A and we'll answer it as we go. And if we don't get it answered during the webinar, we will send a follow-up email with answers to the top 10 or so questions. So please feel free to engage. We're happy to have you here. And with that, Emily, I'll hand it off to you.
Yeah, nice to see everybody today. Thanks for joining. I know it's a busy week for many of you. So I'm going to jump into my topic. How do we not bore our clients? How do we get them excited about tax planning? Let me go into presenter view. There we go. So you've probably bored your clients before. We've all used jargon that maybe gives them a little bit more confusion. So we'll talk about some jargon to avoid, how to potentially communicate some of this tax strategy to them, how to communicate better with our clients. Just bring some clarity. So how do you talk about tax planning in a more clear manner that allows them to potentially move forward? So if you've ever given any recommendations to any client on any topic before and they haven't moved forward, think about why that could be. So did they not follow through because they're not knowledgeable enough? So is there a kind of a point where you might need to educate them more? Is it how things have been communicated? Do they have other things going on personally? So we're going to talk about how to best communicate tax planning strategy and just general strategy to clients. Creating a roadmap, so helping clients understand what's coming next in your plan with them. Going to talk a little bit about client case studies, ideas, some analogies to potentially use. So I love hearing other advisors' analogies as well. So if you have one that you love and that you use, please feel free to share with the class any types of analogies that you love to use when you talk about tax planning. How to use visuals over verbals. So some of our clients, as you know, people learn in different ways. So they need to hear something or see something, or maybe they need to just absorb it. So how do they learn? Do they get it right away? Do they need to hear it a couple times? Do they need time to absorb? So thinking about how our clients learn and what their preferences are, maybe how to bypass the client. So sometimes when we're playing that game of telephone of telling our clients to talk to their CPA about a topic, and then they talk to the CPA, and then the CPA talks to them, and then they relay an answer back to us. And we're trying to kind of get that communication flow a little bit better. So how do we potentially communicate some of our tax planning strategy to CPAs, and maybe even talk around them, around the client, or just copy the client in on communication? And then some relatable action steps that you can share with clients that feel more doable. So what do these two pictures have in common? Both of them make me feel, I feel like I think I'm reasonably intelligent. I could maybe learn what all these parts are of a motherboard of a computer or under the engine of a car, but I don't care. I don't want to. I really don't. So if my husband lifts up the hood of my car and wants to point at something, I immediately just don't want to learn about that topic. I don't care. I feel this mental block, like I'm not going to learn these things. And maybe you guys are more engineer brained, or you worked on cars as a teenager, or you have a hobby car that you're fixing up and this is exciting to you. This isn't exciting to me. So sometimes we have to remember that clients sometimes have that reaction. I literally feel like heaviness in my chest looking at these two pictures, and I immediately feel avoidant, like really don't want to know. And so I have this strong reaction to something like this. And you might have something like this or similar in your world. That's sometimes how clients feel when it comes to taxes. So pay attention to that. It's not an exciting thing. These forms are not fun to look at. It's very easy to go cross-eyed and they're long. So telling a client to go hunt for some information like, hey, what was your AGI last year? Or what was it? What was the total tax that you paid last year? Even that information that to us is like, oh, it's the first, second page of your tax return, no big deal. Clients can feel like avoidant about it potentially, right? So that's something that we want to potentially be conscious of. So one of the things that I love to do is to simplify, and that's one of the things I love using Plan for specifically is so much nicer to look at a really nice looking tax report. So we'll get into this. I'll talk about kind of how I talk about the tax report, but even just putting a nice, clean visual in front of our clients can get them a little bit more receptive, kind of thinking about or understanding their taxes a little bit better. So as we know, using the right language, the right tone, kind of avoiding some of that jargon, avoiding talking over somebody builds trust and grows your relationship. It makes the client feel like it's a conversation with a friend and a trusted partner. I can't tell you how many people have come to me as clients who've said, my advisor used to talk to me like I was a little old lady or I didn't know anything, or used to just talk right over me or wanted to sound so smart. And one of the clients who came to me said that there was a big, huge frame poster in his advisor's office with a picture of like what was presumed to be an advisor on one end and a client on the other, and all this like confusing mess in the middle. And the advisor said to his client, he said, you hire me because you don't get that and I do. And so that type of mentality and relationship, I actually think it's kind of dying in a way. I think that clients are attracted to people who speak at their level, and especially women want a thought partner, want somebody to educate them and speak at their level. I think we all want that. So that's something that you can kind of gauge with your client what type of communication style they have, what kind of understanding they might need. And also just a reminder that last Friday, I delivered two full plans to clients back to back. And I felt at one point during the second meeting, like, oh, I already said this exact same thing. Maybe I'll switch it up. And then I thought about, no, this is the client's first time hearing this. So think about there can be some things that feel, even if you simplify it, you might feel that you've simplified your language a little bit. You might be repeating yourself. You might be saying the same thing to multiple clients, but that's okay. It's especially if it's the client's first time or they need to hear it again, it's important to simplify that language. So things to think about as you go into any client meeting, especially if it's one that is a little bit more technical, planning heavy. If it's a tax planning meeting, I'm in the thick of it right now. I have a bunch of tax planning meetings going on right now. So thinking about what is your mood and energy going into the meeting. So thinking about what can I maybe do to give myself that energy to a topic that naturally, sorry guys, can be a little bit boring. So it's just following those things. Like, I know it's kind of crazy. It's that smile and dial thing, but we can trick our bodies into being in a better mood and having more energy. So the studies say that even by putting a pen in your mouth like this and forcing yourself, like forcing your teeth to show, can actually make you feel happier, even if you're not genuinely smiling. And if anyone loves Amy Cuddy, presence, power posing, doing the victory pose or putting your hands on your hips, doing any of those type of body postures can actually help trick your body into being more energetic and confident going into a meeting. So it can lower your lower your cortisol and increase your testosterone. So even if tax planning isn't something that you're naturally excited about, then potentially doing that. Also, making it personal, using the client's language back to them. So during the discovery process, using marking down their words. So how they talk about taxes. So if you do any kind of discovery meeting where you're interviewing a client about their tax history or experience, how they currently have their taxes prepared, how that has gone for them in the past. What are their kind of feelings about taxes moving forward? What has their experience been? So using some of the language. So if they talk about paying Uncle Sam, guess what I'm going to use in my meeting? I'm going to say paying Uncle Sam. So those are some things that potentially marking down and actually putting in quotes their words and repeating them back. Clients love hearing their own language. And then just even asking them silly questions about the household conversations. So how do you and your partner talk about taxes? When do you think about them? Using the you statements in kind of talking about this, like this is how this is going to impact you and your taxes. And so emphasizing that can also bring a little bit more excitement to it. So potentially, so an example of that is I went into one of the delivery meetings I did last week on Thursday. I went into the tax session. I said, I'm so excited to tell you all about this donor advised fund idea because we talked so much about how you love to be charitable. You have all these highly appreciated shares. I've got a really cool solution that we can potentially use. And so potentially telling them, I'm excited to talk to you about this. I'm excited for you. And I thought of you. So I immediately thought of you for this potential strategy because of your goals to do XYZ. So if somebody might want to kind of step back into a part-time role or step back and consult, yes, because you want to leave the big job and potentially have this nice valley where you have a lower income for a period of time. There's a huge tax planning opportunity there. And I'm really excited about that. So potentially bringing up that kind of excitement into your conversation can be helpful as well. So avoiding jargon. I just got yelled at on a podcast a couple weeks ago because I said TCJA, and they stopped me and said, "Wait, hold on, what is that?" So just making sure that some of the abbreviations that we use potentially even put it into Chat GPT. So I have this later in my slide deck. I have used it quite a bit to ask Chat GPT to explain something to me like I'm an 8th grader. So that is a setting for a lot of different types of writing apps as well. So Grammarly, Hemingway app, or even ChatGPT, you can put your even more complex kind of strategy idea or notes into it and say, hey, can you simplify this at an 8th grade reading level? That's the reading level that is like nice and smooth and easy and tends to remove a lot of the big jargon that we might potentially use. Or even just ask ChatGPT, hey, is there anything in here I'm using that's jargony or potentially can have them kind of shut down? Is there any simpler way to say this? How do I simplify what I'm potentially trying to say here? Or can you explain to me what AMT is? I'm writing a client email and I just want to have like a really simple, like 2-sentence or 5-sentence kind of answer for this. So using some of those tools to help you think through how to write something, you can just kind of throw some words at them about how you would maybe talk about it. Even internally or whatever, and have them turn it into more client-facing words. So those are some of the tools I regularly use. Grammarly, I love just popping into ChatGPT and getting some simplification in there, and just making sure that that also makes sense to me and sounds like me as well. So practicing with your teammates. So role play is incredibly helpful, or running terms by non-industry folks. So we work with a marketing consultant who is not naturally in our industry. She was never a financial planner. And so as I'm talking through either blogs that are going on our website or quotes I'm submitting or just conversation I want to have on a podcast or in a presentation like this, I will talk to her and she'll give me honest feedback about, hey, you lost me here, or this is really not interesting. This part was boring. So that's something that think about if you have anybody potentially, maybe it's somebody on your team who maybe doesn't have as much tax technical knowledge, that maybe you run it by them and say, does this make sense to you? Does this flow well? Is this something that should be client facing? And then conducting a meeting postmortem. So I don't know that we take enough time to do this to at the end of a meeting, especially if you have a second chair or a paraplanner joining you or somebody on your team, another advisor joining you, potentially sitting down and saying, how did that meeting go? The second person, maybe their job can be to look at the client's body language and reaction to what you're talking about. You can see over time what resonates with people. So if you have a lot of meetings, thousands and thousands of meetings, you can start to kind of decide what language works well. And it's really nice to have a second person who's on the meeting, who's not doing the talking, who can then potentially give you that kind of feedback. So creating that kind of feedback in your team can also help with that as well. So just thinking about, these are some of the things that actually came directly from ChatGPT. So we're aiming to help you pay less taxes during your lifetime, or AGI being total income after certain deductions, or kind of that highest tax bracket, the tax you pay on your last dollar earned, or prepaying your taxes now so you don't have to pay them on the same money later. So there's some different ways that you can kind of bring some of that language really, I mean it, dumb it down. Clients already know you're smart, you're credentialed, they've looked at your website, they trust you. So using more simple language, you don't have to use a ton of jargon in order to show somebody how smart you are. So one thing I love to do is, I already kind of flashed this up here, is love to look at the tax report with my clients. So this is one thing that clients don't understand their tax returns. I can't say that enough. I think I say that in every single webinar we do here, is that clients really have no understanding of how their tax return works. And so even just taking the time to walk through a clean and simple report for them will be a game changer, completely different than any other advisor they've talked to before. So taking a look at a nice, clean, beautiful report, you can explain to them their total income, what AGI is, what their deductions, so standard or itemized, taxable income. You can explain marginal bracket or average rate. And some of the other areas as well is really explaining to them where they fall in the tax brackets. People really don't know how this works. I can't stress that enough. I've worked with many executives, C-suite executives, who don't understand how marginal tax brackets work. So potentially just walking through a nice clean report, how everyone in the whole country pays 10% on their first X amount of income. And this is the total tax that you pay on this income here, 10%. So calculating kind of where they fall in the tax brackets and explaining it to them by showing them their number, their income, and where that falls in here is very powerful. And the visual, so again, that visual learner, some of our clients are like me. My husband tells me that my brain is rows and columns like an Excel spreadsheet, that he thinks I've got a grid in my brain, like an Excel spreadsheet, and I think I do. But a lot of clients love that visual, like just filling up the thermometer, like a school fundraiser, being able to see you've got a lot of room to go in this 12% bracket. And then check it out. Dollars that you earn above this mark here, you pay 22% tax on those next dollars. So for somebody who has some low income years, potentially being able to share with them, would you rather pay 12% now, strategically or purposely, or in the future, if you're going to be in the 22% bracket, would you rather pay 22% later? And so sometimes being able to lay this out for them as you're talking through some potential strategy, if you're doing income smoothing or Roth conversions, or if their income is above a certain bracket, and maybe we're talking about putting money into a donor advised fund or a QCD, anything that you're potentially talking about, potentially just showing them on the brackets what you're talking about, sometimes can be really, can help it click for them a little bit more too. Because people really don't get, even if I said to a client, yep, your next bracket, you're going to go from the 12% to the 22% bracket, it still doesn't necessarily click for them. So being able to show them where they are in that bracket, how much income is left in it, and where they're going to be kind of in those next set of brackets is useful as well. I talk to my clients a lot about in those different types of strategies, doing some gain harvesting. So if their income, if they're having a low income year, so I work with a lot of mid-career tech professionals who take sabbaticals or maybe kind of step back, maybe don't take an income for a period of time. Those are time periods where maybe we look at doing some gain harvesting, so being able to show that the income, the taxable income thresholds for the long-term capital gains preferred rates. And then also, I talked to every client about Medicare. So I talked to a 34-year-old client recently about future Medicare premiums, because in that whole, this drives me crazy, this whole Roth conversion conversation that we all fight about on the internet. There's so many LinkedIn posts about how it doesn't make sense if sometimes for Roth conversions, if your tax rate is the same. But the other element is potentially if your income is higher in the future, your healthcare costs are going to be impacted by that. So I just try to explain really briefly to clients that that's something that when we're kind of zooming out and doing that 30,000 foot view, we're thinking about things like not just what tax rates might be in the future, what their income might be in the future, but what their healthcare might cost them in the future as well. So this is an amazing opportunity to educate clients. So even if they aren't anywhere close to age 65, educate them on what are the different thresholds and what are the premiums that they might expect to pay additionally each. So if a married couple has a really high income at different points in retirement, potentially talking about the additional annual cost, this is the monthly cost for that healthcare. So this is another thing too that helps you kind of see any additional income sources. So right now, as I'm doing tax planning, I'm taking a look at prior year income sources to see if there's anything on there that a client has forgotten to tell me about, or it helps you to potentially find some additional outside investments that they might have or bank accounts. And there's other planning considerations. So really clean and simple, stoplight colors. Do they fall within a potential income threshold for a certain type of credit? Are they in a phase out? Are they over? If it's over, it's red. So it's very easy and simple. So this is something that helps to kind of demystify the tax return, because this looks a lot better than what they've had access to, which is this here. So I'd like to use the tax report to help with just walking through that conversation. You'd be surprised, even if it seems simple, it is something that they've likely never done before or understood. And that is that way to build trust as well. If you can help them understand something that is typically something they've been avoidant of or is confusing to them, that's incredibly helpful as well. The other thing that I like to do with clients, especially this time of year, I'm going into scenario analysis with them. So as kind of many of you are probably doing this kind of close to year-end tax planning, where you're taking a look at their year-to-date income sources. So we're looking at pay stubs and interest and dividends and capital gains, and kind of seeing what the year might look like. So that's one thing I like to communicate to clients is ideally we like to avoid surprises on April 15th. So if we can know today, which is right now, November 7th, if we could know today what your taxes are going to look like on April 15th, that's going to be incredibly helpful. So that's another kind of build trust moment. But also, what are some different strategies that we can maybe do to optimize that? So if we were in that other example, where we got a lot of room on that 12% bracket, and they're potentially a high income earner, and they're going to be pushed up into the 22, 24, 32, 35, 37 bracket in the future, then potentially just being able to walk through that and look at that potential impact. So another thing I wanted to just point out to you all, if you didn't already know that this existed or know that you could find this here, this is also where you can potentially project what does a scenario look like if there's no sunset of Tax Cuts and Jobs Act, or if there is. So that is something that your plan might look a little bit different than if you had made the assumption in your planning before that we were going to see that sunset of Tax Cuts and Jobs Act. So our current tax bracket system right now, expiring at the end of 2025. A lot of the planning softwares automatically assumed that. So you'll see if you go into Money Guide Pro, eMoney, Right Capital, and you're going to see that tax plan, it's going to assume that we're going to have higher tax brackets and a different structure moving into 2026. So this is something you can turn off in all of those softwares and in Holistiplan. So this is something that earlier in the year I used to model for clients that we were doing multi-year planning. So if we were looking at maybe smoothing out income, or if we were looking at maybe bunching deductions or bunching charitable contributions, I might have looked at and created a draft scenario. So I can add a scenario here, copy the one I'm working on, and then just create another one here. And then just side by side, I could look at current law, which hasn't changed yet, or no sunset. So I can adjust this here and then compare side by side. So as we were making decisions, we could potentially look at that as well. But ultimately, this is something that I like to do with the client. So rather than just coming to a client and saying, hey, I looked at your taxes last year, I looked at your income this year, and I think we should do X, Y, Z. It's taking a few minutes to say, here's the scenario I built for you. So these are the assumptions I made. So a lot of times for building trust with any financial planning scenario or situation, some of that building trust comes from being able to talk through data and information together. One, you're going to be more accurate because there might be things that assumptions you're making that are wrong. Like maybe their interest isn't going to be so high because they liquidated their high yield savings account to buy a boat. There are things that we don't know. Maybe their income has changed and maybe they forgot to tell us. So as we are potentially moving forward in the scenario, you can say, yes, this is what we're using potentially for wages, interest, dividends. If we're looking at things like a Roth conversion, this is where I plug it right in ultimately. And then I can see right here the incremental cost, so the tax cost of that specific Roth conversion. So that's another thing. What is that potentially going to cost me? That's something I can walk right through in the scenario analysis with the client. And then to be able to just explain to them, walk through all of the numbers and where are we going to end up? So based on their income and withholdings this year and strategy that we're looking at, what might they owe in April? We don't want that surprise. So those are things that I like to do with the client in order to potentially build that trust. And I'm seeing a few things in the chat here. I just want to maybe check in on any questions that you guys have at this stage. Q&A. Would you say using CPA as jargon? I usually say tax accountant or planner. You know what? That's a really good point. I have typically used CPA. I consider that more common language, but you're right. Saying CPA would be. So when Emily does tax planning, is she doing federal and state and estate? Yes, I am. Most of my clients are actually in Texas, so not always state tax planning, but yes, we do. We look at all of those and estate taxes as well. So that's of course on the table to potentially change. So that's something that the state tax conversation typically happens in the bigger financial planning software, right? So that's something that inside of Right Capital is where we potentially look at estate taxes. So there's an estate planning screen that will potentially calculate that for you. So as you potentially start to go in and look at potential strategy, trust strategy, things like that, you can then look at what those potential future estate taxes might look like. So yes, that is part of the conversation. It's not usually in these tools, what I typically use within Holistiplan, looking at their previous tax return or looking at a potential scenario for the next few years, usually not state tax conversation there. But in that, when you zoom out in the financial planning software, like Right Capital or eMoney, that's usually where that conversation comes into play. So when you get a client's year-to-date pay stub, how do you project their wages and taxes paid out to the end of the year? Ultimately, that's why we're doing these meetings in November. So typically, most clients know, especially if they have similar pay rates, similar withholdings off of their paycheck, we already kind of know what their contributions are going to be in their 401k. So I typically make assumptions that how they're kind of set up now inside of their paycheck, if they're a W-2 employee, I assume that that's what their income is going to be. If it's somebody who's a business owner, typically we're going to be looking at they usually have some type of cash flow projections and P&L that we can look at that helps to kind of understand what their tax plan might look like. But yeah, so we're typically looking at year-to-date income. We look at those pay stubs to potentially project forward. We also look at, how much did they typically pay in interest and dividends and year-end capital gains in previous years. What have they paid year to date for each of those areas in bank accounts and different investment accounts? And then just making a little bit of a maybe adjustment or assumption. So I tend to pad and buffer a lot of those things too. So I might overestimate a little bit any trading that might happen by the end of the year that might create additional realized capital gains. I might make that assumption just to kind of pad it. And then usually whenever we're doing any kind of strategy, typically kind of leave a little bit of room, especially for Medicare planning, because as many of you know, okay, if you make a mistake with, federal income tax brackets and somebody pays a little bit more on a few dollars, okay, it's not ideal, but it's not the end of the world. But if you go a few dollars over, a dollar over a Medicare bracket, for example, for somebody who's in retirement, that's going to then push them into that next cost tier for Medicare. So that's something to potentially pay attention to. Great question, George. How would the no sunset scenario change for 2024 projections? It won't. So I should have gone in there and explained that a little bit better. So when I typically look out at multi-year scenarios, what I'll do is I'll typically have 2023, 2024, 2025, 2026. And in that type of scenario, or you can just build a 2026 side by side and then make that adjustment. So very often when I'm going into the scenario analysis, I do like to look at a few years at a time just to kind of see that landscape of what kind of income changes or deduction changes or credits, what are we potentially looking at that might be different that we could potentially work with, especially this is most of the time is when they have the ability to bunch deductions or either look at charitable giving strategies that might be a little bit different. So that's a scenario where I would have built this out through 2026, and 2026 is where I would make that change. I just wanted to show you where it existed. But that is an excellent point. So we go into back in my deck here. So another thing is potentially showing your work or talking about some of the things we think about that might not work for a client. So that's another way to potentially build that trust. So for clients that are, for example, a married couple coming to me, they're both saving, they're both maxing out their 401k plans on a pre-tax basis. And I might have no recommendations there to make any changes to that. So based on where their tax brackets are and what their income expectations might be or brackets might be in the future, we might be able to kind of make that determination and run that out. But I will tell them when I get to that screen. So as I'm kind of walking through financial plan delivery or recommendations, I'm typically going to say, yes, I did evaluate whether or not you should do a partial contribution, do Roth 401k, or make your total contributions a Roth. It doesn't make sense for you right now, but it's something we'll continue to evaluate in the future. So continuing to kind of share some of the different types of topics you think about. Sometimes potentially sharing with them, these are some of the things I do with other clients. So we typically like to write out case studies for our clients to see of other client scenarios. So I use that on LinkedIn. So if you don't follow me on LinkedIn already, please do. Sometimes I'll put out there a potential client case study, or we'll put it into our newsletter, where I'll talk about that in front of a client. Like, yeah, I had a very similar client to you. These are some things that we did. Reduced their total lifetime taxes. It reduced their taxes over the couple of years that we maybe did some different strategy. So potentially thinking through what are some of the things that you can tell them that you do that maybe didn't work or didn't make sense for them. Hey, I didn't consider this for you because X. This is something that I evaluate for clients and I'll look at for you in the future. So potentially telling clients, this is some of the work that I can do or will do. The worst thing that can happen is that a client leaves you because they don't realize that you have this capability, or that you don't realize they can ask you this question. Oh, I'm going to another advisor because I'm going to start my own business. I really want to work with somebody who's focused on business owners. Or I really want to work with somebody who can do XYZ when I'm in retirement. And it might not be something that you're doing until they're there. So for a lot of clients that are, I talked to somebody this morning who makes more than $2 million a year. He's going to retire early. And so some of the conversation with him is telling him, hey, not a lot we can do right now. You have a really high income, but there's this huge opportunity once you move into retirement, especially early retirement. Doesn't have any required minimum distributions. He doesn't have pension. We don't have to start Social Security. There's so much opportunity there to kind of play around with his income, and he has different buckets of money in different types of tax statuses. So we're going to have a lot of options there. So, and that's about 2.5 years out. So I want to explain to him, hey, I'm really excited for this future point of time where we have so much opportunity. Can't wait to go through all of that with you and potentially maybe think about it a little bit more. So some of the types of strategy, it's important to maybe share with clients what you can do and what you have the capability of. Yeah, so some of those future variables. So helping them consider potential future strategies. So um, for people with young children or with really high expenses right now or something like that, maybe they're charitably inclined and just can't yet. So you want to talk about your capability of helping guide them through those conversations or gifting to their family members later on when they're adults. And so some of those different types of things you want to maybe explain to them that you can or put on your website or client roadmap or tax roadmap of these are future meeting topics. These are future things I can help you solve, or explaining that to them and just continuing to tell clients what you can do or will do for them in the future, even if it doesn't make sense now. The other thing that I typically will explain to clients is that we review this each year. So we know that the same client this morning makes more than $2 million a year, retiring a little bit early, wanted to know when I might think that he should file for Social Security. He's retiring at 59 years old. So said, yes, it's not something that you can make a decision on now, and I'll map something in now, but there are a lot of variables here. You might decide to go back to work part-time or consult or do something different. There are other variables with what happens with your investments, what we decide to do. If we do some big Roth conversions or other things, we might want to push that income off later, or you might have a health concern. So there are variables that change that will make it so that we need to revisit these plans in the future. So stick with me for a long period of time. We've got a lot to talk about in the future, and having that explained. Save your wins. So when I leave a client meeting, I will typically jot things down for a few reasons here. So if I have a win, so earlier last week, sat down with a client where I helped them map out their donor advised fund strategy and what the tax savings would be for them potentially from that strategy, because they won't pay capital gains tax on the stock that they're going to put into the plan. Also, they are going to be able to bunch that into a year that they received a big bonus because their company was purchased. So that type of opportunity, I like to save it in our CRM system and tag it as a win so I can remember that and maybe weave it into the conversation in the future, remind them of that. Memorize certain examples about different clients that sound like your ideal client, your niche client, to be able to maybe utilize that and listen to their language back to you. So the best way to understand client-centric language is to hear what they're actually saying to you, and how they explain things back to you. And then repurpose that. So at the end of a client meeting, I'm also jotting down anything on any topic. Here's a great scenario to put out onto LinkedIn to tell potentially prospective clients some of the work that we do and why we're different. Every single financial planner's website says they do something with taxes, tax planning. But that looks very, very different advisor to advisor. Some have dedicated meetings and think through different strategy and use tools like the scenario analysis to actually help their clients not have those surprises in April and to see and understand their taxes. That is completely different than somebody who says, oh, I tax loss harvest. So there's different ways, and sometimes clients can't see what that difference is when they're a prospective client coming to you. So being able to maybe have some of those examples to maybe share that can be helpful too. We'll be sending the slide decks around later, but there's a couple of different types of analogies that work for different types of people. So when we think about kind of tax planning, might be gardening for your finances. So potentially if you think about kind of preparing the soil, preparing everything, getting everything ready, planting those seeds. So potentially planting some of those dollars into different types of accounts, pruning and weeding. So some of the types of strategy along the way that you just have to kind of maintenance upkeep with it. Some of the seasonal timing with your garden. So I'm getting ready right now for winter with my garden, doing some composting. So that's a way to kind of think about, using some of those losses, so maybe getting some of those losses ready for future growth. So using some of those losses to create the opportunity to offset those future growth. And then harvesting, so reaping those tax savings. So especially if you think about helping your clients get to retirement in a more tax efficient manner, or have big tax-free buckets to potentially utilize in the future, and to kind of harvest all of that later. So different analogies like that. Again, I love to hear other people's. So please share if you have any neat ones. There's always navigating a road trip. I'm always using some kind of, and I don't use both of these together, but very often I'll talk about, mapping out a route, or using a GPS, or refueling, avoiding speed traps. If you were on my last webinar, we talked about, it was all about bombs and tripwires. So potentially just figuring out a theme that is exciting to talk about for a minute, talk about detours, talk about shortcuts, use language that you like. Especially if you have any kind of niche that you serve, or certain types of clients that you serve. I know just from my LinkedIn friends that there are some that just serve like a pickleball community, or golf, and use golf analogies. So just use one that potentially works for you. And that's something too. You can ask ChatGPT, hey, I golf, a lot of my clients golf. This is something I'm happy to talk about. Can you help me talk about this tax strategy in golf terms? That's another thing that we can maybe use AI for as well. So using those visuals. So as I talked about, in your long range kind of planning software, assuming you all use something, potentially getting into those visuals with every type of client. Because sometimes, as you know, clients sometimes need to hear things multiple times. So you might need to talk about in your prospective client meeting some strategy, talk about how you're different with how you provide tax planning for your clients, how that works. Remind them at plan delivery, remind them through your newsletter, remind them through case studies in LinkedIn, remind them again as these different topics come up, especially if there isn't planning opportunity now. But continue to use visuals, use stories to potentially help that. Another topic really is sometimes clients just don't want to be involved in the conversation. I am helping a client right now finish her 2023 taxes. And yes, it's past October 15th. She is told me in our first meeting, she said, I'm super, super avoidant when it comes to tax planning. I made her finish her 2022 taxes. She just got that refund check last week. So she has very avoidant behavior about taxes. I still can't figure out totally why. So what I essentially do is I've established a line of communication with the CPA, gotten her full buy-in for that. I helped gather information with her. I just sat with her while she did her tax collector and pulled different pieces of information. I was that accountability person to help her pull those different documents and where to go to get them. And then I'll continue to communicate with her CPA. One of the tools that I use to communicate with my client CPAs is their tax letter. So one thing I'm doing right now, as I'm sitting down with clients and doing their tax planning meeting, their year-end tax planning meeting, is as I'm going through it, I've got all of their information right now. I know all their income sources right now. I know different things we're working on. So if we have helped them with a post-tax IRA contribution or Roth conversion, or a QCD, or if I know they had a rollover in that calendar year, or made HSA contributions or distributions, just being able to quickly add, it's really easy to just add additional topics on here, just to tell the CPA, here's what's potentially going on. So that builds that relationship with that CPA, where some of that in between, that telephone game of putting your client in between you and the CPA or EA. Sorry, I don't mean to keep picking on it. You know what? I'm going to go with that advice from somebody else. Tax professional, tax advisor. So working with that professional, their tax professional, moving forward, that's one way to potentially help them. So just a quick tip that if you do those things separately and you do your tax letters for your clients in the spring, in February, maybe start to stage it all out now. So the workflow that I have that helps me prepare for my current tax planning meetings helps me send the email out to gather what I need to do the scenario analysis now. and to review the prior year's tax return. So those are things I'm asking for: prior year tax return, because if I upload that into Holistiplan, I can very clearly see the data and then create a copy of that very quickly. So I can copy the 2023 scenario into 2024 and start to adjust and work with it. So asking for all of that. The very last thing on my workflow, as I'm doing a year-end tax prep, is to stage the tax letter. So this information's fresh. It is right on my mind. I just worked with all of this data, throwing all of this information about what I know about their tax life is really easy to throw together when you do that. And the really cool thing is too, once you build a tax letter for every single client, you can copy that over into the next year. So for many clients, things haven't changed. They still have a Schwab 1099. They still maybe work at the same employer or contribute to an HSA. So those things that can be copied over and then just updated moving forward. So that's really easy, and potentially you can just bypass the client altogether. So just remember, we are in the peace of mind business. People just want to know that you're looking out for them. You're thinking about what they might need to do. And they want to know, are you paying attention to all of this? Do you understand all of this? Can you handle this for me? And what can I do? So what are some changes that I can potentially do? There's a lot we can't control with the markets. And what's interesting about the kinds of emails and phone calls that a lot of us probably get this week are all market related, right? Like, what are you guys doing to the portfolio now? Based on the election results. And it's really also like, I think even more what we can control is, what do we now know about what taxes might do? So what are some maybe assumptions we want to make or adjustments that we want to make? That was actually the big reason why I met with that client this morning that makes $2 million a year, is potentially looking at tax rate this year versus 2026. He has a deferred compensation plan that will fully pay out in 2026. So he can defer some income this year in 2024, defer it, and then have it pay out in 2026. And so that has changed potentially if you make the assumption that the Tax Cuts and Jobs Act, or current tax brackets, will just continue on into 2026. That will extend that. So that recommendation actually ended up changing from earlier in the year of how much to defer in a deferred compensation plan at the end of the year, based on maybe some assumptions about income, but also tax brackets over the next few years. So those are some things that, what are some things that we can do? Because there's a lot of things that we don't have control over. What can you do for me? So what are some of the things that an advisor can do for the client? And what can we're not going to use CPA anymore, right? What can my tax advisor, tax professional do for me as well? So here's some action steps. You'll get the slide deck as well. So you'll have some of these different action steps of what can clients do, and what can we do? So potentially automating contributions. So we just got the updated contribution amounts for different types of accounts. So potentially sending out notification to our clients. Yes, in January, you might want to adjust your contribution levels into 401ks, HSAs, making those adjustments, reviewing paycheck withholdings. We can review where we are so we don't have those surprises and make adjustments. Keeping track of medical expenses, educational expenses, especially if they're maybe not spending money out of their HSA every year, they're just kind of accumulating those medical receipts, helping clients do that. Some people want to take action and do stuff. Give them action items. So give them some things to potentially work on and do that we have control over. Consider maybe thinking differently about how they're making their charitable contributions. So if they might want to give with appreciated stock, or bunch those contributions, what are some things that we can maybe do? Make sure they're saving receipts for home improvements, or especially if they have rental properties or other types of investment properties, vacation home. Maxing out HSA contributions, so some of those types of changes. And then what can we potentially do with market volatility? Does it make sense to potentially look at capital loss harvesting or gain harvesting, revisiting 529 contributions, Roth conversions in later years, and then just doing that kind of checkup. So we'll send out all of those over to you, but I want to make sure we've got a few questions sitting out here that I want to make sure that I'm potentially answering as well. So one of the questions is, do you think showing the multiple scenario analyses can be confusing, too much data? Yeah, it depends on the client. If we're looking at multiple years, so the client I mentioned earlier that came to me last week, they were potentially going to be making a larger charitable contribution. And so we laid out multiple years and said, here's what your taxes look like if you spread it out. Here's what it looks like if you bunch it into 1 year or a different year. So depending on the other variables with their income, it was really just then kind of plug and play with some of the different variables and kind of making some of those decisions together. So it depends. Some clients get a little bit confused by that, but I think that clients sometimes, if you kind of slow down and do that input together, I think they do appreciate that. That's been my experience, that you get more buy-in, more interest and engagement if you actually work live. So I do the same thing in financial planning software. So in Right Capital, we're going to go in and do a working meeting where we're going to go into the retirement analysis and plug some things in together and see the impact and talk about how that all works. A lot of clients love that. Some clients just want to know, am I going to be okay? Great. Do I need to do anything? No? Yes? Okay, great. So it's just understanding your client and also gauging from them if you have a really good intake and understand their history, what they might want to do with that. How easy is it to appeal Medicare overage to get it to reduce if a mistake is made? So there is an appeal process that you can potentially go through to, because they're looking back 2 years. So that's a 2-year look back on that Medicare IRMA bracket. So there can be an appeal if there's an error, but there, as you've mentioned in your question, but also even if there is a high income year for whatever reason, you can potentially write back and say, yes, this is going to be my ongoing income. These are my ongoing sources of income. That was what my income was 2 years ago. That's not expected moving forward. I'd like to appeal that surcharge. So that is a process that clients can potentially go through. I don't know that I would say it's easy. It takes a long time to hear back. But what I would potentially consider is working with a healthcare consultant to help support that process. So they often have a sample letter, they have experience with that. So I have local people that I work with here in Charlotte, but I also work with companies like Move Health that have consultants that work with your client directly on, different types of healthcare plans and can potentially consult through those types of possibilities as well. Snap yourself with a rubber band every time you say potentially. Oh my gosh. Thanks for that feedback. Now I'm going to watch this back and play a drinking game or maybe put a rubber band on my wrist. Do you discuss Social Security taxes too, especially the impact RMDs can have on them? Yes. So you can potentially talk through what amount of your Social Security will be considered taxable. To be honest with you, for my practice, most of my clients are in a situation where they're going to be above those thresholds. So it really just depends on, are your clients in a situation where maybe their income is $25,000 a year, maybe their Social Security won't be taxable, or they're in that phase out. But we do talk about how typically for most of my clients, potentially for my clients, they're in that bracket where they're paying tax on 85% of their Social Security. Also, there's some changes too, state by state. So for a lot of us that have a lot of clients that are virtual, it's understanding which states might tax Social Security. There were just some recent changes. Certain states like Missouri, I believe, just stopped taxing Social Security. So just paying attention to that as well. And being, it's nice to be the source of that information for your clients too. So, and sharing that out if you have clients in those states. Question was, how can you show us in the tool how to do a Roth analysis? There are whole taped webinar series with Holistiplan to get into that. That will show you and walk you through the entire Roth conversion. I actually think coming up, and Laura can maybe mention this, there's, I believe, in a week or two, Holistiplan specifically is putting on a step-by-step, the entire webinar is on talking about Roth conversions. So I think that would be good to potentially watch. There's always replays out there as well. So check out the video channel. Holistiplan does a ton of webinars. If you have not done Debbie Taylor's masterclass, there's a lot of strategy ideas in there as well. If you are in the space right now, if you've joined this webinar because you're looking to skill up and use some of these different types of tools to help you leverage your time and skill up, that's something you potentially do as well. Question is, how do you introduce this service to new clients? And is it part of your annual fee, or do you add a surcharge for this type of service? So I've just made the decision. This is just how I've chosen to practice, is that I have one service model. I don't like having, personally, I don't like having different service tiers because I hate to be in a client meeting and have them ask me a question and we say, oh, that's not part of your service plan. We don't talk about taxes here. So I have one offering, and it's including everything that I do. So it's comprehensive planning and investment management for all of our clients, and that does include the tax planning strategy conversations as well. But there are some different tools out there that tell you how to price for that potentially. So I know there are some kits as resources that are out there about how to price specific services separately. And I know plenty of clients or plenty of advisors that do a la carte pricing. The coolest thing I've seen is that there are some advisors that have a rate calculator. So flat fee advisors that will have you plug in potentially your situation, sources of income, if you are single or partnered, all of those different things. If you want them to do the taxes, those different aspects, and then they will price that on their plan. But yes, some advisors like to have that kind of simplified process. I personally don't choose to do that. Okay. How do you save your wins? Do you use a tag in a CRM or some other clever way? That's exactly how I do it. It's a tag in my CRM. So as I put in a note, I will just write the word win in all caps. And usually I'll put in an emoji. So if you've followed me on LinkedIn, you know that I like emojis. And so I'll put in a little emoji, a little party guy with like the confetti coming out. And I'll put all caps win, and then I'll put in what happened. So here's what happened in the meeting. Maybe we say, I just did a post recently of saving a client $500 a year on their life insurance by having them go somewhere else instead of their group policy, or if they have a tax planning win, saving money on taxes, either on a total lifetime basis, which you can calculate in big financial planning software, or if you're really going to zoom in and look at current year, next year, some of those differences, potentially guiding clients through that and tagging those wins in there as well. That just reminds you too, all the great work you do, especially if a client is maybe wondering about the value that you provide. It just reminds you some of those positive things that you do, and you can pull them back up. So I just have a tag literally called win that I tag on that CRM entry, and I can pull all my wins of all different types in there as well. I think I can do one more question. Okay, great question. Is the data that's in that letter, was that manually entered from an integration from another program? It's manually entered. So in the tax letter, when you go in here, there are, so if I wanted to add a tax document that they might expect to receive, so this is really a list of which tax documents should the client expect to receive or the CPA expect to receive from the client. Those are pre-populated in here. So you can just go down here and say, yep, mortgage interest statement. So they've got a mortgage, they're paying interest. You can click on this right here. And then description wise, I'll just put in here that they have Fairway mortgage. So that also helps the client with, because there's a client-facing version and a tax professional version as well. So the client can potentially use the word potentially again. You guys are killing me. So you can use this list to help the client maybe know what to gather and what to go out and get. So this is also something just to help them get organized. So think about how much of our jobs are just helping clients get their data organized and bring clarity to it. That's what we do. We sell peace of mind. We help them get organized. We help them bring clarity to it. And these are just some of the tools that help with mapping out and guiding them on what to expect. Those are things that are just incredibly useful in those relationships. So as Laura mentioned, we're going to send out my slide deck as well as the video of this presentation. And then I've done some other ones this summer. So if you want to see a little bit more about how I use the CRM system or workflows, that sometimes I get a lot of questions on that. So I have some previous recordings as well that you can go back and watch about how I specifically practice. I know we're all a little bit different.
Emily, outstanding. Thank you so much for another amazing webinar. Tons of questions in the comments. So if we didn't get to your comment, we will answer a portion of them in the follow-up email. So definitely make sure to keep an eye out for that follow-up email. Like Emily mentioned, it will have the recording, it will have the slides, it will have the Q&A that we just talked about. And then we'll also put a link to some of her previous webinars so that you can see the other material that Emily's presented on, which you shouldn't miss any of it. It's all been absolutely fire. So with that, thank you for coming, and we'll see you next time. Thanks, Emily.
Thanks, Laura.